All right, folks, if you are trying to make money in Cleveland real estate, I am your guy. I am your guide. I am the man who's going to talk the talk, walk the walk, help you navigate and understand the Cleveland market. Now, cool thing about me is what I do is I tell you what I think that you need to hear. I don't tell you what I think you want to hear, right? You'll get a lot of people that'll give you that fluff and tell you what you want to hear. That ain't me. That ain't your boy, right? Your feelings, folks, usually not on the top of my mind, right? The fact of the matter is I've sold $200 million worth of investment real estate in this particular market. When I bought my first property, I was making $30K a year working at a freaking Radio Shack at 21, right? Now I'm 35 and am managing a $75 million portfolio with $200 million plus in sales under my belt, right? So I tell you that so you know that, like, look, dude, I've walked it. I've been there. I've done it. I know what I'm doing. So when I give you advice, it's coming from the lens of somebody who's already done it, right? And that's going to be very important, especially for my man today, Rohit. Rohit, you're out there in Seattle, and you have a goal of putting yourself together deals with owner financing, and you're really trying to get it set up where you don't end up with any money out of your pocket. And I've told you this in some of your previous videos. I got to let you know, bro, that's fine that that's your dream. But literally, to actually get all that to get put together on a deal that makes sense, you're literally looking at like a 1 in 1,000 shot, right? Seller financing in and of itself, brother, is very hard to get. But there are seller finance deals out there. That's probably like a good spot to start. And Rohit, I've told you this before, the best way to get access to those is going to be to go to HoltonWise.com and go into our property search for sale tab and order yourself access to the MLS directly from the MLS, the 3 varying searches we've set up for you guys so you can get your own MLS access for all properties that have seller financing available. Those are properties where the seller has actually chosen to let the world know, hey, I'm down to finance you guys. Okay, but you need to know, Rohit, even with that, what you're going to get is you're going to get those properties randomly are going to pop up on there, and you need to be able to act quick to take them down. But also, you also need to know there might not always be good deals because oftentimes people are selling properties via seller finance because they can't sell them any other way, right? So with you, your goals are to get like a screamer of a deal and have it be seller finance, which those two things combined is already like 1 in 100. But then on top of that, you're trying to throw in another thing where you get it no money down. And, you know, I'll keep making videos if you keep buying them, brother, but I think you're going to end up buying 1,000 videos from me before it works out, right? The last offer I submitted for you, you gave the seller 2 options. One was you wanted them to finance the entire asset and have you put down no money. And the other option was you wanted to have them finance, I believe it was 50% of the asset, and then you were going to get a bank loan for the other 50%. Now, that property, we targeted that property because it's been on the market for like 6+ months. So those are people that we want to start picking at, okay? Because those are people that eventually will end up doing like a seller finance type deal. Those types of people are likely to do those, but you should still be offering much better terms than that, right? Your 0% down offer is really not appealing to anybody. So I highly doubt anybody's going to ever accept that. It would be batshit crazy for somebody to sell you a property with no skin in the game. It makes no sense. Now, your other strategy of doing it where they give you a loan of 50% of the value of the property, we're headed in the right path. We'll be able to put more of those together for you, but I don't think you've actually thought this through in regards to the logistics of it, because you're saying you're going to get a bank to loan you the other 50% of the property. And I've done cross-collateralization type deals, but what you need to understand, brother, is if you're buying a residential property, a lender, a residential, a true conventional lender, is not going to be down with that. They're not going to be down with funding 50% and then having a second mortgage from the seller on there. They're just not going to approve that deal. So unless you specifically have a lender that's willing to do that for you, there would be like a more non-conventional type lender, private lender. That's probably not even logistically going to be possible. Like, number one, I don't think sellers are probably going to take that because they still see that you literally have no skin in the game, right? They see that, like, if you were to walk away, what did you lose? Nothing, because you didn't put up the money they put up, and you also didn't put up the other money because the bank put it up, right? You literally have nothing in the game. So I think sellers, number one, are going to probably not be interested in that offer because of that. Number two, if they're represented by a real estate agent, I believe most real estate agents would well, probably not most, honestly. Most real estate agents don't really understand creative finance, but I think a lot of people out there would know that, hey, that logistically probably isn't going to happen, right? So, Rohit, if you're really trying to do that, what I think you should do is definitely talk to your lenders and make sure you have a lender who knows that's your plan and is willing to give you that money, right? I think you should go down that avenue. Or the other avenue I suggest is you offer sellers better terms, right? So I am going to run the numbers on a very nice property in Cleveland that I think is pretty overpriced, and I'm targeting overpriced properties for you because I'm trying to target properties for you where the sellers are like, I can't sell my property. They're starting to get desperate, right? Because we kind of need somebody in a desperate situation to be willing to finance you, right? So that's why I've chosen this property for you, and I believe you should offer them at least 25% down so they see that you have some skin in the game. We're going to run the numbers as such. I am James Wise, and I am here to help you make money. I'm going to be running the numbers on a real deal. You want to be here. Yeah, we're going to go out of state, but of course, you know my team's going to take care of that. Let's check it out. All right, folks. Now, this one is a cool deal, okay? This one has got a lot going for it, right? And that is going to be specific to its location, right? We can do a lot of things with this property. This property could probably make us money in a couple different ways, right? And that is because of the locale, right? So you got downtown Cleveland, okay? And then you also got University Circle. Now, like you got like Silicon Valley out there, right? What do? Tech stuff, you know what I'm saying, right? Like Seattle, what do they got? Starbucks and a bunch of whiny employees that cry when they have to work 8 hours. But that's neither here nor there, right? So you think Seattle, you think Starbucks, you think Texas, you think oil, you think Silicon Valley, you think tech, right? What we have in Cleveland is healthcare, right? So this property, with its downtown location, University Circle location, it's right in the heart of everything, and you're going to have the opportunity to make a lot of money off of, in my opinion, would be the best target would be healthcare workers, right? So I think we need to set this up as an Airbnb investment. I think we're going to make the most money doing short-term rentals. And that doesn't necessarily mean you're always trying to target folks like just that are going to stay for like a couple days, right? We got to set it up not like permanent tenants, but like on a short-term basis because you're going to get varying people there. You will get some people who want to stay downtown and, you know, when they come into town for Cleveland, you know, you got the Rock Hall, Cavs, Indians, Browns, you got all that kind of stuff, right? But you're also going to attract travel nurses, okay? People working at all the various hospitals. Like I said, Cleveland, we're known for healthcare, right? So because of this location of this particular property, I think we're going to make buku bucks on it going that route. I mean, you could eventually, if you really wanted to, put like a long-term tenant in there, but you'd lose money, in my opinion, right? I mean, I think you'll get, you know, nurses that want to stay 60, 90 days, 6-month contracts, things like that. And then when you don't have those folks in there, you're just renting it out as an Airbnb. Now, it looks like the people that bought this, it looks like it's like, you know, like an old school, like grandpa looking house, right? It looks like somebody's grandma's house, but it's a very nice grandma's house because it's not from like the 70s, right? The house itself is actually very, very new. Now, a lot of people that buy from HoltonWise, a lot of you guys are out there from the West Coast, so when I say new, this property probably seems pretty old to you, but this is brand new for Cleveland, okay? This particular property was built in 97, so what is that, 2007, 2017? That's 25 years old. 25 years old in the Cleveland market is like legit brand friggin' new, okay? Because most of the housing stock out here in this market is literally 100 years old, sometimes older, okay? So 97 is like super duper new. I mean, honestly, there's probably more properties in the HoltonWise portfolio that were built in 1897 that were built in 1997. So this is very new. So all those new lead paint regulations and things like that that you hear people talking about, you don't have to worry about that, because lead-based paint was illegal in Ohio in, I believe, 79, 78, somewhere in there, 78 or 79, right? So all we really would want to do after you get all this person's stuff out of here is probably just spruce it up a little bit, right? Probably maybe like 10K, because, they got a lot of stuff on the walls, so I'm sure there's probably going to be a decent chunk of holes in the walls. And, just in general, like, everything looks really nice in here. But when you actually, like, get it completely empty, right, you start to notice a lot of things. Like, there's just, like, a lot of stuff, right? Like, these people take care of their home. They got a very nice home. But when you actually remove everything, it doesn't really look as good, right? So we'll probably end up spending somewhere around 10K if I had to guesstimate. But other than that, like, everything looks pretty legit with this house, dude. Like, so this is very, very nice. You're not going to change what it looks like, but I think we'll just need to spruce it up, right? So they have it listed at $339.9, which I think is like wildly overpriced. I don't think it's going to fetch that, right? I want to pick it up for you for a little cheaper, right? I think we can get it for you for $275. Honestly, with the way the market is right now, you get a lot of people, they're pulling back. It's turning more into a buyer's market, right? I think these sellers, maybe they're looking at like comps and they're looking at Zestimates from like 8 months ago when you wanted to sell a house, you put it on the market and within an hour you got 50 offers. The market has shifted, right? That's why people come to HoltonWiseTV, because I understand what the Cleveland market does and I give it to you guys straight, right? If I think you need to pay list price, I'll tell you that. But I think we could beat these folks up, and I'd like to get it to you for $275. Now, doing that, if we actually got 100% occupancy out of this based on like our monthly rate target, right, we'd be bringing in like 11.5 a month or 140K a year, right? 139.5. But folks, I don't shoot you fluff like that, right? I break these things down for you how they'll really work. In reality, we're probably only going to be renting this bad boy like 62, 63, 64, 65% of the time, right? So when you factor in actual vacancies, because we're going at this on a short-term basis, and then you also factor in the cost to have HoltonWise operate the entire thing so it's completely passive for you, the reality is what you should really be making is not going to be 11.5, but it's still quite nice because it's going to be about 4. Now, at $275, what you want to do, you put down 25%, get a loan for the other 75%, okay? So you're out $68,750, you get a loan for $206. That would be a cash-on-cash return of approximately 53%, cap rate at 18. Quite nice. Now, a couple things, though, right? If you go back to this one chart, you see we got the purchase price of $275, and then I have renovations and furnishings, right? I have line item those as 0. I did not include those in this, but I will tell you, think we'll probably end up like spending like 10, but you really are not going to know what we're necessarily going to need to spend to spruce it up till it's like totally empty. I think 10 will more than cover it because it doesn't look like it like really needs like quote unquote repairs, but like, you're removing all that stuff off the walls. You got furniture against the walls. I think you might end up spending like 10. And then, of course, if we are going the short-term route, right, you're going to need to furnish it. So you probably end up spending like 25 on furnishings, right? So that's an additional 35, but you really don't need to outlay that 35 in the form of cash because HoltonWise contracting, right, we do accept credit card, right? So essentially, you have the ability to get all the furnishing and this renovation done after the fact on a credit card, right? If you really wanted to, you can do like one of those 12-month no interest, cash advances on a credit card, pay us on a credit card, whatever you want to do, right? You could buy your furnishings and your renovations that way, right? So reality, you could get that essentially no money down, right? You wouldn't have to pay for that out of pocket. You could use the rents to pay for that, right? So the cash-on-cash return number here, that projection, depending on which way you look at it, if you're counting that 35K into your investment or if you're not, right, it could go up, could go down kind of deal, right? I just wanted to make sure I'm very clear to you guys so you see the expectations of what you need to do, right? If you want to try to achieve this very high amount of monthly rent, go on the short-term basis, we can absolutely do that. The location that we have here is going to be very good good for us to be able to work that strategy and increase your ROI. But I just want to make you aware, to achieve that, once we get all these people's belongings out of there when the house goes vacant, we'll need to spruce it up, and of course, it's going to cost some money to furnish it, right? Because you got to think, right? You need beds, you need couches, you need end tables, you need kitchenware, dining room tables, you need flat screen TVs, right? We like to put flat screens in the living room. We like to put them in all the bedrooms. We like to supply extra beds so people could sleep as many people as possible, right? We like to set these things up with smart TVs too, so they can, come in, they could log in on their Netflix, their Hulu, HBO, whatever, whatever streaming service you got. Myself, I'm a big Peacock guy because I need the WWE network. You know what I'm saying? If I'm on vacation, I can't miss the Tribal Chief Roman Reigns jacking some MFers up. You know what I'm saying? I got to see that stuff, right? So we got to make sure we give those people that stuff. And then, hey, guess what? Just so you know, if you're giving everybody smart TVs so they can log into their Netflix and their Hulu and watch WrestleMania and all that jazz, you know what they do? A lot of times they take the remote with them on accident or they lose the remote. So part of the business is you're going to be buying replacement remotes, right? We can't really put a chain up. That would probably give a poor impression, So just things like that. I just want to make sure you guys are aware. And again, I believe that is why I break these assets down like this. I break these properties down like this. I break these things down to give you guys the most real-world look at these properties, and I think that is why most people investing from out of state or in-state come to HoltonWise, come to HoltonWiseTV, because I really break it down in a pragmatic way, right? I've done over $200 million worth of business, and I run a massive portfolio in the city, and we've produced thousands and thousands and thousands of hours of content for you guys to digest, because I believe, truly, the number one most important thing is creating a network of educated investors. The more educated you are, hopefully the better your investments will go and the more money you will make. Let me know what you want to do with this one.
Thanks for watching. Subscribe to HoltonWise TV for more financial information, education, and entertainment.